Hey, it's Matt Decker with Leverage Wealth Management. Hope that you're doing well today. I am shooting a video on long-term care insurance, and if you can tell by the little angry face that I drew there, most people hate long-term care insurance for some really obvious reasons. So what I'm going to do is I'm going to run through just some of the general things that you need to really understand about long-term care insurance. Then I'm going to get into some news articles that have been written over the last year to year and a half, and then I'm going to show you an alternative that if you're considering long-term care insurance, you should absolutely check out, because I think it is far and away better than just your standard long-term care insurance policies. So without further ado, let's get into some of the things that you absolutely need to know about long-term care insurance. So number one, long-term care insurance premiums are not guaranteed. You do not have guaranteed premiums, and we're going to get into that later. So what that means is your premium fluctuates from year to year based on the carrier's profitability, which is really scary because you have no idea what these long-term care policies are going to cost you in the future. The second thing that you need to understand about these long-term care policies is that they are use it or lose it. Now, what we mean by use it or lose it is this typically just comes with a long-term care benefit only. So if you never enter a long-term care facility, you actually don't get anything back. There's no death benefit, there's no return of premium, there's no cash account. So really, you're paying $2,000 to sometimes $6,000 or $7,000 a year for a long-term care policy that is only going to pay you out if you happened to use the long-term care benefit and go into a long-term care facility. So not only are the premiums not guaranteed, but you also have a policy that if you don't use it, there's no value left over. So you could potentially pay $5,000 a year for a long-term care policy over 20 years and never get any benefit out of it. The third thing that you really need to understand about these long-term care policies are going to be the inflation riders. By far, these are the most expensive portions of any long-term care insurance policy. And when you see premium increases, I personally have seen premium increases on inflation riders for these long-term care policies of between 100 to 300% increase in premium on this particular rider in a year. So the way your inflation rider works is they'll say something like your monthly benefit is $150 per day, but that $150 per day is going to increase at 3% per year for life. And this rider right here is extremely expensive. So you could get into a situation where you're paying $400 to $500 a month. You have this 3% inflation rider on there, and 10 years down the road, you're not paying $500 a month anymore because you've got some of these 100 to 300% increases. Now maybe you're paying $1,500 a month to keep this rider, and you have no guarantee that you're actually going to continue paying this $1,500 a month, because remember, your premiums aren't guaranteed. You have no guarantee that you're actually going to use this benefit, because if you never enter a facility, nothing gets paid out, and this becomes a really expensive policy that is a great source of frustration. So let me show you just some of the news articles that I just did a quick Google search on. It took me next to no time. You can do the same thing. All you have to do is search long-term care premium increase, and you'll see a bunch of news articles that are recent, current, that show just what's happening in this industry. So here's the first article that I grabbed. It's from January of 2019. It's written in the Sacramento Bee. I'm not quite sure what that is, but the headline, I feel deeply ripped off. Steep hikes in long-term care premiums jolting many customers. So this guy is mad because he got a 50% premium increase through Transamerica, which is just a crazy year-to-year increase. But here's what's even crazier. So they sent him a letter that said, this is basically the first premium increase of many. We tried to get more, but the state prohibited us from getting more, meaning they asked the state to maybe increase premiums instead of 50% by 60%. and the state capped them at 50. But this next paragraph is key. Regulators approved rate increases of 40% or more in about half of the requests that insurers made. A quarter of their requests were for premium increases of 20 to 39%. The last thing I want to point out is that this is California. So each state has to approve their own premium increases for long-term care. This is California, which is one of the notoriously difficult states to get a premium increase in. Let me show you a couple other news articles. So this is from the middle of 2018, and this is about Genworth, which is, I believe, the largest issuer of long-term care policies, or at least they were at one point. Genworth raises long-term care insurance costs an average of 58%. It affected roughly $160 million of in-force premiums. Now, here's what's really crazy. So you got this 58% increase, but check out this paragraph. Genworth had already raised costs on $72 million of in-force premiums in the first quarter this year. So this is 2018, according to company figures. It follows an average 28% increase in 2017, which follows a 28% increase in 2016. So Genworth has had premium increases in back-to-back years of, in 2016, 28%, in 2017, another 28%, and then last year, 2018, a 56% or 58% increase on their long-term care premiums. I mean, that's absolutely insane. No wonder people hate long-term care insurance, because look at this. Who can afford this? Who can afford back-to-back premium increases of over 20%? Here's the last one I'm going to show you. So this is from Florida Blue, which is obviously in Florida. So we're talking about different states. All these different states are doing this for their policies because they have to. Blue Cross Blue Shield of Florida is notifying its long-term care insurance policyholders that premiums will increase by 94% over the next 3 years. 94% over the next 3 years. That's insane. What's even crazier is this article does a really good job of totaling up several premium increases that have occurred in the state of Florida. And so here they are. So this is premium increases just since 2017. So this is just 2 years. There's way more than this, but this is 2 years. So Continental General, 87% hike. Medico, 81% hike. Constitution Life Insurance, 84% hike. Penn Treaty, 48%. John Alden, 76%. State Farm, 38%. Lincoln Benefit, 61%. Bright House, which is MetLife, 56%. Continental Casualty, 80%. Allstate, 21%. And what's even crazier is if you go back and actually read this, I'm just telling you what was approved. Look at what was actually requested. Continental General, they asked the state for a 241% increase. Medco asked the state for a 94% increase. Constitution Life asked for a 120% increase. Lincoln Benefit requested a 102% increase. Allstate requested a 90% increase. The state only gave them 21. Jackson National requested a 100% increase. American General, 73% increase. It was approved at 52. MedAmerica requested 56. They got 43. United of Omaha requested 17. They got 15. Transamerica, they requested a 0% rate hike, but the state figured they'd help them out, and they gave them a 60% rate hike. You can't make this stuff up. Just about every single long-term care issuer is requesting and being approved for massive rate hikes. And again, this is just through 2000, or just going back to 2017. This has been going on for a long time. So no wonder people hate paying for long-term care insurance. But here's what's crazy. A long-term care episode is one of those things that looms out there for every single person. And it's one of those things that if you don't have a plan for it, it will absolutely destroy any retirement plan that you have in place. It will destroy any retirement plan that you have in place. And how do I know that? Well, do a quick Google search on just long-term care facility daily cost, and it tells you. So this is from longtermcare.aci.gov. This is a government website. So the average cost for a long-term care facility, for a semi-private room, not even a private room, semi-private room is $225 a day. $253 a day for a private nursing room. If you want to know more about the cost of long-term care insurance, you can go to this website. It's a phenomenal website. It's from Genworth, which is ironic because they've been crushing people with premium increases for years. But they do a really good job. They do this cost of care survey every single year. And what you can basically do is you can select your state, you can select your region, and you can find out basically how much it's going to cost in the future for long-term care insurance. And it is not pretty. It is an astronomical cost. So you can go to this website. It's genworth.com/aging-and-you, or if you want to, you can just Google cost of care survey, long-term care Genworth. You'll find it. But I want to end this video with something that I think is exponentially better than just paying for non-guaranteed, use it or lose it standard long-term care insurance. Now, in order for this to work, you actually do need to have a lump sum of money sitting around somewhere, like in a CD or a money market or a checking account. So let's just say, for the sake of example, that you have $150,000 sitting in, let's just say, the bank. So you got $150,000 sitting in the bank, and let's say that it's a money market account, okay? And let's assume that that money market account is earning roughly 1%, which you and I both know it's probably not, but let's just assume it's earning 1%. So that's $1,500 per year that you're earning on this money market account at 1%. But after taxes, it's more like, let's call it $1,125 if you're in the 25% tax bracket. Obviously, if you're in a higher bracket, it's going to cost you more. So after taxes, you're making $1,100 on your $150,000 that's sitting in the bank. Keep this number in mind, because what this is going to become is our opportunity cost. And we'll get to that in a second, but this is going to become our opportunity cost, $1,125. So what if we could take that $150,000 and buy a policy that leveraged that $150,000 for both long-term care and death benefit? So what it's going to look like is something like this. We got a big slice of the pie here. And let's say that this section right here is our $150,000. Once we put this $150,000 into this policy, we can get our money back, $150,000 without penalty. It's guaranteed. It's full return of premium after 6 years. Now, let's say that before you get a chance to use your long-term care benefit, you happen to die. So if you happen to die before you use any long-term care benefit, your $150,000 actually becomes a $200,000 death benefit. Okay, so it's not use it or lose it, because you can get your money back, or at death, you get $200,000. But let's assume that neither of those two things happen. Let's assume that you don't pass away, you don't take your money back, you put your money in here, and you use it for long-term care. Well, you actually have an additional $450,000 of long-term care coverage. So let's say you go into a long-term care facility. Your total benefit from this $150,000 becomes the $150,000 that you originally put in, plus the additional $450,000 that your policy is generating, for a total of $600,000 in long-term care benefit, which is phenomenal. $600,000 in long-term care benefit. Now, what's really cool about this is that it's all guaranteed. It's all guaranteed. Your $150,000 is guaranteed to be $150,000 if you take it out in the form of cash. So if you put it in, you can always get it out, guaranteed. Your $150,000 is guaranteed to be a $200,000 death benefit if you die before you use your long-term care benefit, guaranteed. And your $150,000 is guaranteed to turn into $450,000 if you need it for long-term care coverage, meaning you get a guaranteed $600,000 long-term care benefit for the $150,000 that you put in. Now, how much did this plan cost you? Did it cost you $150,000? I would say no, it did not. It did not cost you $150,000. Why didn't it cost you $150,000? Because you have access to your cash, and after year 6, full return of premium guaranteed. So what did it cost you then? Obviously, it cost you something. It cost you the opportunity cost of this $150,000 earning 1% per year in your money market account at your bank. So this $600,000 long-term care policy cost you $1,125 per year, which is 4 to 5 times cheaper than buying a standalone long-term care insurance policy that doesn't have guaranteed premiums and that's use it or lose it. This is a phenomenal option. And all these numbers that I'm showing you right here, this is not based on a 40-year-old super healthy triathlon runner, okay? This is based on a 65-year-old male who's in standard health. 65-year-old male in standard health. In fact, let me show you exactly what I'm talking about. So here's that policy that we just went through. 65-year-old male, standard non-tobacco, $150,000 single premium paid, $200,000 death benefit, $600,000 total long-term care benefit, full return of premium, $150,000 return of premium benefit. And if you use all of your $600,000, you will always have left over a $10,000 benefit. Here's another way to look at it. There's 3 guarantees. The first guarantee is that if you need long-term care insurance, you're going to be guaranteed to get a total of $600,000 in long-term care, assuming that you live that long. And you'll always have your $10,000 left over in the form of a death benefit that gets paid tax-free to your beneficiaries. So that's the first guarantee. You put in $150,000, you get a total of $600,000. The second guarantee is if you die prior to needing your long-term care, you get a $200,000 death benefit, paid tax-free to your beneficiaries. And the third guarantee is if you want your money back, you get $150,000 guaranteed. Now, if you want all $150,000, you actually have to wait until year 6 to get all $150,000 back. So for the first 5 years, there's a little bit of a surrender charge on there, but once you get past year 6, full $150,000 guaranteed paid to you. If you would like to explore this as an option, you can go to my website, leveragedwm.com/LTC. leveragedwm.com/LTC. I'll put it in the description below. You can book an appointment right there from that webpage to get on my calendar and talk about this as a strategy. It does require a single premium. It does require that you be in decent health, but it is a great way to solve a problem that everybody has, and that is the ticking time bomb of what if you have a long-term care insurance episode. So I hope that this was helpful. Again, Matt Decker with Leverage Wealth Management. Go to that website, book an appointment with me if you're interested in talking about this as an option for you, and I look forward to talking to you then. Take care.